Welcome! Today we're going to be covering section F1, the profit and loss statement. Within section F of the capstone, you're going to have two financial statements to prepare, a profit and loss statement and a balance sheet. These statements will help you demonstrate that you can apply the knowledge learned throughout your degree program and bring together these comprehensive statements for your hypothetical business. Now, all of the financial information in the statements is going to be invented or hypothetical, but you do want to make sure that the figures appear plausible and reasonable based on your company's operations. And you will have a financial plan template. There will be two tabs. One will be for the profit and loss statement, and another will be for the balance sheet. And this template is required in working through the capstone. So of course we have a number of resources available to help you in working through the financial statements. The e-text embedded within the course's study has a great chapter 16 that explains the purpose of financial statements and also has some great worksheets to help get you started. There's also some great YouTube videos by Dr. Brennan Foltz on the income statement and the balance sheet if you want a quick refresher on what goes on these statements. So working on the forecasted profit and loss statement, this will require you to develop a month-by-month forecasted profit and loss statement, which is also known as the income statement, using an estimate of your company's revenues and operating costs for the first year. Now, as noted previously, you are welcome to start your company in any month that you so choose. It does not have to be a calendar year business going from January to December. But you do want to make sure that when you start your business is consistent throughout the plan. So if you've decided to open your company in March in your sales forecast, and that's your first month of sales, you want to make sure that your profit and loss statement also begins in March and then goes through the first 12 months. So if you're starting in March, you would end your first year in February. If you start your company in June, you would end your first year in May. So you want to make sure you have that consistency between the prior sections of your plan and the preparation of your profit and loss statement. So here we can see a completed example of a profit and loss statement. Going along with our bakery example, we have our sales on the top couple of lines. In this case, we have two different sources of revenue. We have our storefront sales, and then we have our event sales. So we have those listed separately, and those sales should match exactly what you prepared within your sales forecast within section D4. If the revenue numbers do not match, you will find that both of those sections will be sent back to you. So following our revenue or our sales, we have our cost of goods sold, which if you are selling a product, a tangible good to customers, you will have to include a cost of the items that you're either purchasing or creating somewhere within the statement. And then we take away the cost of goods sold from our total revenue to get the company's gross profit. So next on our profit and loss statement, we have our operating expenses. And when you open your profit and loss statement, you will find that this section is completely blank. It is your responsibility at this point to go through and come up with not only the types of expenses that your company will incur in operating throughout the year, but also the amounts of those expenses and how those may fluctuate as your company grows and changes during the first year of operations. So we can see with this bakery example, they have some wage expense, payroll taxes, rent, insurance, utilities, advertising, travel, and repairs and maintenance. So it can help at this point to go back through your plan, read what you've talked about, and identify some of those expenses and things that your company may need to spend money on in order to operate throughout the year. And then once you've identified the types of expenses, you'll need to come up with how those expenses may change as your company grows. So we can see things like cost of goods sold fluctuates according to our sales. We have other expenses like payroll taxes, which is based on the wages that the company is paying. You may have other expenses like utilities that fluctuate according to the season, or even others like repairs and maintenance that may not happen all of the time. You may only incur certain expenses throughout the year in particular months. So think through that process and how these may affect your particular business and where you're located. So after you've estimated your expenses, you'll add those together to get your total operating expenses. And then you'll take your, in this case, gross profit or just total revenue if you don't have cost of goods sold, and subtract your total operating expenses. And that will give you your company's profit before interest, or in this case, a few months of loss. And that is perfectly fine. There's no requirement for the capstone that you have to have a profitable business. These are usually going to be small startup businesses. So a lot of times you'll find that the first several of months may have some losses in order to get the company off the ground, or you may end up with a net loss for the year. Either way is perfectly fine, as long as your estimates are reasonable. So the next line would be for interest expense if your company is taking out a loan. We see in this case, the company has $50 of interest each month throughout the first year, so they have a loan that they are making some payments on. And if you don't have a loan and you don't have interest expense, you can simply leave that line blank or place zeros within it. And then to get your net profit loss monthly, you'll take your profit before interest and subtract interest expense, and that will give you your net profit loss monthly. Now, if you don't have interest expense, both your profit and loss monthly and your profit before interest lines will be exactly the same. And then your final step on your profit and loss statement is going to take all 12 of your monthly net profit loss figures, add those together, and that will get you your company's net profit loss for the year. In this case, we see the bakery made $8,824 for the first year. Now, these next couple of slides are just going to walk through that same type of process in working through the profit and loss statement, how to estimate and come up with some of the figures. So I'm not going to spend a lot of time on these, as these are great to read through when you're working through your profit and loss statement. This first slide talks about the revenue and the revenue sales line, and also the operating expenses. And we can see this slide just has some general types of examples of expenses that can help to be used as somewhat of a guide when you're working through your plan to kind of think through some of these items and whether your company may need to incur them. Of course, there's always expenses outside of these, but just to give you an idea. Then here we see the various calculations you'll have to make for your profit before interest, your net profit loss, and your annual profit loss calculation. And again, back to what that completed example of a profit and loss statement may potentially look like. And you don't have to feel like you're stuck with the number of lines on the statement. You may find that your company needs more, and you have to add in some lines to show your company's expenses or your revenue, or you may find that you don't use all the lines if your business is simple. So either way is fine. You can definitely feel free to modify the lines within the statement to fit your business needs. Now, a couple of things to note on the profit and loss statement. Cost of goods sold. If your company is selling a product, you will need to show the cost of your product, and this will be either as a deduction from revenue, which is the general presentation, or for the capstone, they do allow you to show it as an operating expense, as long as you have that cost of goods sold somewhere within the statement. Now, depreciation is not a requirement for the capstone. But if you do want to show this expense on your profit and loss statement, you will also need to show the corresponding accumulated depreciation as a deduction from the long-term assets on your balance sheet. So with depreciation, you either show it on both statements or don't show it at all. A lot of you may have pre-launch expenses, so payments or expenses that occur before your company officially opens and makes sales. And you can add these either into your month one expenses, or you can add an additional column before month one to show those payments made before launch. And then finally, taxes are not a requirement for the capstone either, but you are welcome to make a reasonable estimate for those taxes your company may need to pay and include those as an operating expense. And then just like there are things to include, there are also some specific items you want to exclude from your profit and loss statement. One of these is going to be principal payments on loans. As we discussed on the profit and loss statement, you will show those interest expense payments that you make on loans, but you do not want to include the principal portion of loan payments on the profit and loss statement. These payments are going to only go to reduce the liability on your balance sheet rather than counting as an expense of your company. The other thing you'll want to exclude are any long-term asset purchases, such as the purchase of computers, vehicles, land, equipment. These will not be operating expenses. Those types of purchases are going to be reflected as long-term assets on your company's balance sheet. Well, I hope this session's been helpful in understanding the preparation of the profit and loss statement. Please don't hesitate to reach out to any of the course instructors with any questions as you work through your capstone.